Simon Flannery, analyst and managing director at Morgan Stanley, made the call, joins me now. Simon, this is a tough one because the dividend payout, in a way, isn't what it used to be, I guess. But why is the value here right now?
Sure. Thanks for having me on, John. So really, we've seen a significant underperformance by the telecom stocks during 2022 on fears of wireless wars, but actually underlying performance has been pretty good. AT&T has led the wireless industry on subscriber growth for the last couple of quarters, and we still see good momentum in the core communications business going through the next couple of years. But really, the genesis of our call is combining the attractive entry point on valuation with the upcoming completion of the Warner Media Discovery transaction. So over the next few months, we're going to get a lot more clarity around what sort of structure they're going to have for shareholders to get that Discovery deal completed. And then by the middle of the year, that should be completed. And you're right, they're going to change the dividend policy, pay out between $8 and $9 billion. But on a pro forma basis, this will have a yield of about 7%, which will still be one of the top 3 or top 5 in the S&P 500 with a delevered balance sheet, free cash flow after dividends. So we think it should be a really interesting story. And right now, the lack of clarity around the deal is sort of holding investors back.
Okay. No. Where are we in the capital spending cycle around 5G for AT&T and perhaps for telecoms in general? I mean, it seems like they're still subsidizing smartphones quite a bit, particularly trying to incentivize individuals and businesses into all-you-can-eat type 5G plans. But does that indicate that there's going to be a lot more spending? Is that something investors should be concerned about?
Sure. It's a great point. We saw a big 5G spectrum auction C-band end up earlier this year, and the carriers all talked about big spending really from a 21 through to a 2023 period. In addition, AT&T has a major fiber upgrade program, and that's one of the reasons we particularly like the communications infrastructure stocks like the tower sector, because we think they're going to benefit on that side of it. But nonetheless, we still see a path to strong free cash flow generation during this investment period, which will allow them to continue to return capital to shareholders.
There's a lot of talk about metaverse, whatever various people think that is, but whatever it is, people are going to need to be connected to it, probably while they move around, which could be good for the likes of an AT&T. But to what degree do you think they're prepared to take advantage of that, and when would that be something that you factor into your outlook?
Sure. We've heard a lot about it. And this comes into the category, they're building these new 5G networks and these new fiber networks. And what are the killer apps for them? We're seeing a lot of interest in fixed wireless. That's coming through. We're seeing a lot of business-to-business applications. And things like augmented reality and virtual reality and the metaverse show a lot of promise. And we can see more wearables, glasses, and so forth over the next several quarters. And so it won't just be selling smartphones, but it's going to be these additional devices that are going to be generating additional revenues. I do think it's an important question on monetizing that, because if you look at the LTE world, the telco carriers did fine, but in many cases, it was some of the other tech companies that did even better out of 4G.
Yeah, and how much are they going to have to subsidize the equipment to get people into the metaverse if that is their plan? Simon, thank you.